The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 19th. Magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now is just fine, 877-927-6648. You can always send me an email, steve@tfnn.com. Just go ahead, put in the heading radio show question. That would be great. And inside the Tiger's Den, you can send me instant message pings. And it is great to be here with you. Let's go ahead and get this show started on Magnificent Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow trade up 128 points. She's trading out at 21,512. The S&P is up 18, traded at 2451. NDX 100 up 1 4/10%, up 80 points. Russell 2000 up 9/10%, up 12 points. The semis up 1 6/10%. That's $17 to the upside. To the downside, you've got the volatility spot volatility index down 14 cents, trading at 1024. Gold's off 860. Silver down 14 cents. Light sweet crude off 33 pennies. Natural gas down 12 cents or 4%. To the upside, you've got Priceline leading the charge at $48. Clovis Oncology up $28, 47%. Cured something. Google is up 17, Intuitive Surgical up 14, Regenerative Pharmaceuticals up 12. To the downside, it is ticker symbol RMP, Rice Midstream Partners. I'm going to guess down nearly $7. EQT Corp down 7.5%, $4. Alta Beauty Salon down $3. Costco's off about 3. Papa John's down a couple of points out there. Let's start off by taking a look at the markets. Let's go figure out where they're headed to. Let's do this just simply. Well, you've got the Dow at new all-time highs out here, gapping up today. No reason to think that gap is going to get filled anytime soon out here. And it may, but there's no reason to believe that it will. If we take a look at other gaps that are open inside of the Dow, you've got the one that began back here. This is on the trading session of November the 4th. Small gap up on the very next trading session. Nonetheless, it's still open. You come back and you take a look at the gap out here on November 21st. Small gap, still open. There was one just a couple of weeks ago that occurred after the opening on May 19th. Well, it was after the opening on the very next trading session, May 22nd out there on Monday. Guess what? We got a Monday. We have an even wider gap out here. So the gaps, maybe eventually they get filled out here, but don't be expecting this one to come back any time soon. If it does, that would be a gift. So where is it that the Dow is headed to? Well, if we go take a look at its horizontal trading range levels out here, the Dow is headed to 21,675. This is a weekly chart that you and I are taking a look at. We know that the Dow struggled in that 21,025 area. That happened to be the previous horizontal trading range level. Now you've got the Dow headed to 21,675. What happens at 21,675? Well, at that area near 21,512. So if you get another 160, 150 points or so before price starts to run into potential resistance. That is where the Dow is headed to. If we take a look at the S&P 500 right now, she's trading out at 2451. Where is it headed to? Let's go take a look at the three different time frames here for the S&P 500. Three different time frames because we're looking at monthly, left side, weekly, center panel, right-hand side, I'm sorry, monthly is daily is on the left side. Center panel is weekly. The right side is the monthly. From a daily perspective, price just kind of hung around. Remember, we in the 24-26 level. That level has now clearly been broken. There is potential, I say potential resistance right where price is trading in essence right now. We're at 24.52. 24.53 is a weekly horizontal trading range. If price can break above that area, 24.55, and I suspect that it will, then we're going to set up a run into the 25 area, 2500 area. 24.72 happens to be the midpoint of the monthly horizontal trading range level. I suspect price will be able to get above that, and then we start heading into the 25, 2565, even 2600 area. But right now, the next area of resistance is really kind of upon us inside of the S&P 500 in the 2450 area. So an important level to watch. If we go take a look at what's going on inside of the semiconductors out here, the SOX index. This is right near resistance. But let's I'll get it out of my system here. Let's take a look at the longer term, the monthly chart, which is a very bullish looking chart out here. Yeah, I mean, when you take a look, we haven't really done much this month, not so fast. When we take a look at these horizontal trading ranges, we can see that last month, price just simply cleared the 1066 level, the month of May out here. And what did we see when we saw that little bit of a sell-off last week? I believe it was last week. We saw price come back and test that horizontal trading range level, 1066. That's what you like to see when you break above a resistance area, come back and test it. That is what's taken place here. Now the semis are free to run up to the 1297 level. That is where they are headed to. That'll get you back into the 2000 highs out here. There is absolutely no reason, zero reason, nada, zilch. You come up with all the other interpretations of the word zero, and that's the meaning. So 1297 is in fact where the semis are going. That's taking a look at the monthly chart. You've cleared 1078. That happens to be the weekly horizontal trading range level, and 1073 is on the daily. So just simply staying above 1066 as the semis are on their way into the 1297 area. And that is where the markets are headed. Oh, wait a minute here. Somebody wanted to take a look at the NDX 100. So if we go take a look at that, we take a look at the week link out here. Well, right now what the NDX is doing, it's taking on that 5769 area. That happens to be the monthly horizontal trading range level. And if it can clear this 57, 67, 69 area, that says price then starts to move up to its next HTR area, which in the case of the weekly chart, it's already in essence tested once. That was a couple of weeks ago. So it'll head back up to those highs. 59.18 is the number. Once price is able to clear that area, then you're looking for a move to 60.73. That is in the NDX 100, and that is where these markets are headed to. You got the Dow up 127, S&P up 18. We'll be right back. I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, Dow's up 128. So in the NDX 100, if we take a look at the market breadth out here, this is our chart provided to us by our friends over at John Logan Taz out here. If we take a look at the green line, represents a number of issues inside the NDX 100 where there was the damage that was done, the number of issues that are above their market profile high. Once you break above that's, and if you close above that area, then you basically don't have any resistance on the daily time frame. So we're looking at a daily chart out here. And presently, there's 27 issues as of 1:18 in the afternoon. 47 issues trading in between the box. 37 are below the box. The below the box is the red line out here. So you've got nice three little colors out there. I like to go ahead and take a look at what's above and what's below and look for those crossovers. When they occur, they can, in fact, be a nice confirming change in trend in the market. We're not just there, again, 27 versus 38, but that could change by the end of the day or certainly tomorrow out here. So you don't have that confirming signal. Had a request. I did filled in for Basil. My system went down just as we were coming on the air. So we still got through the show okay, but there were a couple of requests. One came in from Tom, and Tom wanted to take a look at ERY. So Tom's question is, I'm looking over my system, looking to re-enter the ERY trade I got out last week at 1340. So let's go take, this is the Direction Energy Bear 3X ETF out here. So as we take a look at it, let me do this. Give me a second. I am assuming, Tom, and it's bad to make an assumption, but I'm assuming that this trades off of the XLE, but I could be wrong on that. Let me just take the ERE as we speak right now. And let me go ahead and put some market profiles up here, because your question was, where do you enter next? And as we speak right now, price has closed below its weekly profile, top of the box. The profile box is a bullish structure. That just means at the center of the box, which is 1177, closer to the bottom, 1091. But when you get back inside a range, which in essence, that's what this is, there's really two things that are going on. One, either 1270 was the buy, and the low so far is 1271. That happens to be the top of the daily box. Or if you were to see a close below this, then the buy area would be 1211, to 1177. 1211 would be the bottom of the box on the ERY out there. So those would be the best places to enter. Let me put some volume scenarios out here, volume by day. That's what the ERY is communicating to you right now. Close above the weekly profile high of 1292, then you could say, okay, that would be a time to get in. But right now, it's kind of in between. You want to see who's going to win. Price level, who's going to win this tug of war? Is it going to be the 1292? Is it going to be the 1270? Is there going to be failure on either side of those numbers out there? So that's the data coming from the ERY. James wanted to take a look at Vale or Valley. VALE is the ticker symbol. And the question is, VALE, is this a viable 7-wave on the daily? I only count 6 thus far. And you are right. There are only 6 waves thus far. That 6th wave being down here at this high volume session on May the 18th. And by high volume session, what we're referring to is a price level of 85 million shares. Now, price is still trading inside. So there is no 7th wave. You identified that, so you're good there. The question becomes, is there some other type of pattern that is out here, such as a failure at a swing point on price and volume? And at this stage here inside VALE, the answer is no. Well, let me get rid of that open gap thing. Let me get a different line out here. I'll just make it a yellow line. So price is still, James, trading with inside that swing point from May 18th, the top of which is 824. You do have some support inside of VALE. It's down at the bottom of its weekly box at 773. Any close below that, and you would go ahead or should go ahead and test the low for May 18th, which is 747. So that being said, and you're looking to buy this, what should you do? I say you wait for price to clear the swing point. That's the swing point for May 18th. Or you start to buy it at about the 773, anywhere down to 773 to the 747 area, and your stop has, and because it's only in wave 6, you got to make sure that your stop is a good distance below the low of May 18th out there. Is there any other reason to buy this? I don't know. Let's put it on a weekly basis for you. Go get a feel for what this thing has done from a weekly standpoint, or at least what it was doing last week. Just testing that bottom of its weekly profile, and the volume was lightening up. So, and what I mean by lightening up, James, I'm looking at the May 15th, the week of May 15th, which had 184 million shares, and last week was just 135. So could be some pretty decent support here at that 773 level. That takes care of all of the questions that were out there from the earlier show. My apologies for not being able to get back to you on those. If you've got questions, well, you can send me an email, steve@tfnn.com, or certainly give us a call. Would like to hear from you. Michael sends in a question here right now, looking like it's going to break and make new highs. What do you think? And Michael is referring to the IWM. So for Michael, let's go check out IWM, see what in fact it is doing. IWM currently trading out at 1.4. This is the weekly chart, by the way, that we have, 141.46. Let's put this to the daily chart. But what we did see out here was a consolidation. So we could do a couple different things. So the first question from you, Michael, was, looks like it's going to break and make new highs. What do you think? That was the question. Let me switch over to another set of charts out here. Maybe it was right over here. And on the screen that you're looking at right now, Michael, I'm going to go ahead and turn off the market profiles. We'll turn those back on. But what I wanted to show you was that square rectangular formation. So price is trying to break out. Price right now is trading above the what I'll call is the consolidation area, which is the swing point. I'm using the swing point from the trading day of March 1st, which had 35 million shares. You can see we're only doing 12 million shares today, so it's not breaking out with any kind of conviction. But it does eventually have a measured move that should take price up to the level equal to or greater than the consolidation. So if we draw in another rectangle out here and just simply go to try to give you a price projection, you're looking at about the 149-ish type level out there. That is on the IWM. As I go ahead and take a look at this chart here for the IWM, we'll do a couple different things for you. You did have a TD9 count a couple of days ago. Not a big deal, though. That's really kind of worked off its magic or lack thereof. Let's see what this did on the weekly basis with regard to volume out here. I tell you what, Michael, when we get back from this break, we'll finish off taking a look at the IWM. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So back to Michael's question. He was asking about the IWM and said, looking like it's going to break out and make new highs. What do you think? So what we identified out here, and I'll go back to the so a couple of things. We can see the sideways consolidation pattern. So we have a shorter-term price projection as to where price is going. We already provided that. We go back to the daily chart, and what we notice here is that price is moving higher, doing less volume. The last time that price was up in this area was 56 million shares, just a few trading sessions ago on June the 9th. So you're pushing higher today on light volume. So then what I do, Michael, is I go down and I take a look at what's going on shorter term, see what I can find on a 30-minute, a 120-minute, a 300-minute, a daily type chart, but usually the intraday charts. And on the 30-minute chart, then recall I have a 15-minute, 10 or 15-minute delay on the equity futures contracts. What you and I can see is that right now it is in potentially its seventh wave out here, letter G on my screen. If it's not G, then it's in, let me just see here. Give me a second to finish this off here. Usually it's C, but it could be its second leg. So it's one or the other. But I'm going to go with the 7 right now because you're going higher with light volume. That means that there's going to be a pullback. So if you're looking to go and get into the IW and buy it on its next pullback as we speak right now, that's what it looks like to me out there. And then to follow up that, so I hope that that helps you out. Then and where could it pull back to? That's another good question. I would go with Stevie's red line on the daily chart. That's a 7-point move down. 1412.50 is the number, but I would be looking for some type of pullback. Do I think that it's going higher? The answer to that question is yes. John writes in, John from Sarasota. John's question is, specifically, how far is it going, the Russell 2000? So we gave you the consolidation area, but let me answer this because I don't know when you say how far it's going, what time frame it is you're referring to. So let's go take a look at a longer term time frame. And as we take a look at the Russell 2000, this chart here is a monthly chart for the Russell. These red lines are the monthly horizontal trading range boundary levels. You can see that if this month, the month of June, price closes over 1379.90, then the answer to your question, John, if you were looking for the longer term, where's price headed to? 1599, that next horizontal trading range level. If I put the weekly chart up on my screen out here, give me a moment. We'll switch over to because I don't know what time frame it is that you were looking for. I will go ahead and put the weeklies up on my screen right now. And clearing this 1405 area is, as you can see, and this is where the Russell has been, in essence, trying to get above this area, this horizontal trading range since February 2017. Price got above it. This was 2 weeks ago, week of June 5th. Last week was nothing more than coming back and testing it and then rejecting it. Now we see prices moving off of that 1405 line. So this is suggesting a move to 1508. This suggestion says to you and or to Michael, who's looking to buy this, to buy that next retracement, and that is inside the Russell 2000. Another question in here: SPY is very low. This is coming from Kevin. With SPY and other ETF volumes so low, how can you be so bullish? I would reframe the question this way. With the SPY and volume being so low, how can you be so bearish? I know Kevin can't answer the question out there, but it stands to ask that question, right? I mean, if one is true, then the opposite must be true out here. It's not really me that is the one that is so bullish. It's just simply the stock charts and the patterns that are out here. I recognize that there's some resistance zones out here, but the simple answer is, if we take a look at these horizontal trading ranges, which are excellent tools, especially when you are above all types of resistance on the left-hand side, and you and I are seeing it and I guess, Kevin, I answer the question this way. Let me try to pull this up here, see if I can actually find this. I might not be able to find it that easy, but I'm going to try. But I'll walk through it as we speak. And that is that, while I look for my table, I might have it in one other spot. Let me just check. There is one other spot that I can check out here. Good opportunity for me to rest my voice. I don't know where this throat thing came from. Here we go. I thought I could find it. Begin by answering the question this way to each of you out there, because yes, I'll give you this. There's low volume. I'd also ask you, how are you going to measure that volume? What are you measuring that volume against? Just volume? Just straight out volume against prior days, prior months, and so forth, in an environment where you can see the rapid purchase of shares out there? Is today's volume comparable to last year's volume? in IBM as an example? Oh, the answer is no. IBM has reduced their float by 35% or so over the course of the last 6 or 7 years. They continue to do it. By the way, Apple has been reducing their float by 6% per year, 6 or 7% per year out there. And so if you have less number of shares out there, and the question is there more money in the marketplace or less money? Forget about the volume. Is there more money chasing assets right now or less money chasing assets right now? I think you're all going to say there's more money. And there's more money because you now have central banks that are buying equities, such as Japan and others out here, and you have fewer shares on the market. It seems to me, just rules of supply and demand, that you need less demand to get to higher prices out there. There are fewer shares on the market. It is really that simple. The QQQs, as an example, the change in float inside of that ETF is simply amazing. Back to the trading pyramid. You can build a table, and you can have one leg, and that leg would be volume, and that's called riding a unicycle. I don't suggest it. I suggest using volume when we take a look at individual stocks. I don't suggest using volume when we take a look at the ETFs today. Why? High-frequency traders that are out there that utilize these ETFs, and we see the volume that comes in the beginning and the end, and that's not anything that is new out here. But the volume inside of those ETFs is going to be totally misleading out here. Volume is just simply one aspect. It's an important aspect. It is no more important than momentum. It is no more important than liquidity or volatility, and it is no more important than the energy or the angle. And there's a number of different tools or indicators that you can use to help measure those levels, those items. Momentum, a lot of people use relative strength indicator or stochastics, or for liquidity, people can use Bollinger Bands. You can use Keltner channels. There are a number of different tools out there. For volume, you can use on-balance volume. You can use rate of change as a tool. For energy, you can use David White's Power Law Vector Indicator. You can use the MACD tool. There's you want at least, when I build a table, I want at least 4 legs out there. And so with regard to taking a look at what's going on inside the market, you want to take a look at 4 legs as well. Kevin, the answer to your question is volume is not everything. We take a look at these horizontal trading ranges. I'll put those up against volume metrics every day of the week out here. And these suggest to you and I that the markets want to move higher. Steve Rhodes with TFNN. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed with TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So go back to Kevin's question, because it's a good question here with regard to the SPY and volume. The one thing that has been consistent with regard to volume metrics and taking a look at the ETF structures out here, especially the Qs, here is the daily chart for the Qs. And what I want you to notice here, and you can see the volume portion of this is about half of the screen. When you take a look at these big spikes out here inside of the Qs, the most recent one compared to the one that we had just a few days ago or last week was back in November 2016. And it's a signal of a bottom. Go take a look at the one prior to that. This is the one from June 24th, 2016. The signal of a bottom. Go back here and take a look at the April 29th. The signal of a bottom. Now, the volume that we had, the one-hit wonder from back here, the actual trading day was June the 9th, was the highest volume that the Qs have seen since the significant bottom back on August 24, 2015. And then before that, it was the highest volume prior to the April 4th, 2014. Now, not always do these volume spikes, it's not always right to the day. Many times it is total capitulation move out here. And so I would answer your question this way, Kevin, in that these high volume spikes are much more consistent with being able to identify a bottom inside of the QQQ series ETF. In fact, if I show you this chart, let me pull this open. Let me go find it. It's the Qs on a weekly basis. It will stick out like a sore thumb. So Qs volume. Where's the volume weekly? Okay, here we go. This chart. Now, this chart takes us back into 2009. The bottom formed right here, March of 2009. And when you take a look at these bottoms that form along the way, how about after the flash crash in May of 2010, big volume back there, what ended up happening? It was a bottom. Come back here into August of 2011, what ended up happening? It was a bottom. Come back here into January of 2014. It was a bottom. Happens to get tested in April of 2014, another high volume. It was a bottom. So you can see all along the watchtower out here, that wonderful tune out here. You know, if volume is the watchtower, well, guess what? You had a big, nice bottom that formed last week inside of the QQQ series ETFs. Now, when it stops working, then then we'll come back to it. But right now, the simple fact of the matter is it does work. So I am more convinced that bottoms are formed with regard to these high volume days, as opposed to worrying about light volume all the way as prices move higher out here. I just think there are too many other factors that you have to consider, and one of those especially is the mere fact of the float that has been taken off of the market. So I just would like to be thorough in answering that question. So, Kevin, I hope that assists you with regard to you put that together along with the horizontal trading ranges. And I just think it's very self-evident as to what the markets are doing out here. And those are just some of the reasons. Inside of the Qs, if you want some additional proof, or inside of the NQ out here, we'll take a look at the NQ, take a look at this daily chart out here, because, I don't know that we're going to see another, I don't know that we're not, but I don't know if we're going to see another 35-point move inside the NQ before the day's over. But we will see that, and that's going to be the point at which you're going to get a determination whether or not there's an A to B equals CD to the downside. That's 58.15. You can see this nice trend line coming off of the election. That's the November election out there. You can see that trend line inside of the Qs, held nicely. The market has been communicating to you and I that it's trying to form a bottom. It did that when it created two hammers last week. Here is the NQ. So to the extent that you believe that the market speaks to us, which it does, by generating Japanese candlestick signals, well, of the last 2, 4, 6 trading sessions, we've had 1, 2, 3, 4. So 4 of 6 thus far have been bullish reversal signals. Hammers are very important out here. Tells you the market is hammering out a bottom, and that's in fact what it's doing. Now, the confirmation will come when price closes above Stevie's red line out there. That'll turn that price oscillator, the bottom screen, which is still above zero, that'll turn it back up. And there's nothing more bullish than a rising price oscillator above zero. So watch the 58.15 area. And if we get to it today, so be it. If not, and you wake up tomorrow and price is trading above it, that'll be another nice bullish confirmation, at least with regard to what the market is communicating to you. Now, what happens if it fails to get taken out? Could go back and revisit the trend line, could form an A to B equals CD to the downside. I'm open to both outcomes, but what the market is communicating to you and I is it's absolutely trying to form, or did form, I should say, a bottom. Okay. There was a question inside the den if I would take a look at the yen, and the answer is yes. And I apologize, Danny, for not being able to get to it anytime before now. But let's go take a look at the yen, you and I, and everybody else out here. If we take a look at the Japanese yen, we look at the currency pair out here, we can see that it's at or very near its session highs. Speaking of candlesticks, this is a daily chart we're looking at. And let me turn this off here. And last Friday's candle session was the opposite of a hammer candle. It was the shooting star. Now, the interesting thing about a shooting star candle is they either work or they don't. I know you'll say, what do you mean they either work or they don't? I'd have to go find some. I can do this. Maybe what I'll do is I'll do it during the break. That's what I'll do. I'll do it during the break out here. So for the moment, you'll have to believe me. Then we go to the break. I'll go ahead and find a bunch of shooting stars, and we'll see how they either work or they don't. 100% of the time, no. High probability, absolutely. In fact, I'd say that the shooting star has more power with regard to what it communicates to you than the hammer candle does. In this case here, it didn't work. By working, you would see additional follow-through to the downside. Right now, price is trading above resistance. That is the high of Friday's session. It's like when you're long, you're wrong when you see it close below a hammer candle. Many of you have sent in and I can't remember what it is, the rhyme for if you, close above the high of a shooting star. Well, I can tell you it means you're wrong. Not you're wrong, but it was the market, the traders were wrong that was going to be any kind of resistance. So in the case of the Japanese yen, it's headed higher. Now, if we go try to figure out where it's headed to, a couple of different things that you and I can do. One of those things would be just to take a look at prior swing points. That takes you to May 24th. That's in the 112 area. Another thing that you and I can do is we can go take a look at the weekly profiles. That's in the 112 area. So 112.55 is likely where the yen is headed to. That is its message, Danny, to both you and I. And as that happens out here, gold is going to continue moving lower. Silver is going to continue moving lower. The 30-year Treasury is going to continue to move lower. To what levels? That's an excellent question with regard to gold. It's trading below all market profiles. Now let's go take a look at retracement levels just to try to identify other possible zones out here. And it's already below the 0.618 retracement level, which was 1248. That says you've got 1235 coming at you next. If you're short, abort. You're so good, Danny. So good. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 121, S&P is up 18 points. So if we just take a look at the S&P 500 as an example here, this is you're gonna see the last 3 shooting stars that formed inside. And this is what I mean by they either work or they don't most of the time. And I mean high probability of the time out here. They're a very powerful candle out here. You want to get it right. I see people identify shooting star candles that aren't close to a shooting star. But if you look back on August 24th, 2016, nice shooting star. The very next session, you saw price move lower. That happened to actually set up a pretty decent high until he had the inverted hammer back on November 7th out here. I don't consider that to be a bullish reversal signal. It is a bullish candle, though. If you take a look at the next shooting star to form out here was back on the trading day of May the 3rd, April 3rd. I take that back, April 3rd. You did see price move lower the very next session. A couple sessions later, that hammer candle was tested, but price ended up moving down into the April 14th level. I believe April 14th, there was a high volume bottom inside the QQQ series ETF. Then the most recent shooting star inside the S&P was April 27th. The market actually closed higher the very next day, so it did move lower out here. We did eventually, many days later, a couple of weeks later, saw the market go ahead and make a one-day wonder on May 18th. But these candles, watch them when they work. They're powerful candles, the shooting star out here. And inside, at least as we know it right now, the yen is trading above Friday's shooting star. So there you've got an absolute failure, and that's why we say, okay, price inside of the yen is headed higher. And if that's the case, then back to the gold chart out here says that it's heading lower. And lower for gold would take you into the 1235 area. And if it passes the 1235, then you come all the way back to the swing point out there. The swing point being from the trading session here of May the 9th. In fact, you'd say that if gold's going to get down to 1235. It's going to get down to test the May 9th swing point, at least the high of 1232 out there. So that's where I think it is headed to. Now, if we take a look at the markets and the NDX as an example, I've given you some figures inside the NQ to focus on, tonight, tomorrow. See where price is trading. Inside the NDX, we took a look at that as well. Here's another level to be paying attention. That's going to be an Apple. Apple's having a nice day. It's up $4 or so. We pointed this out last week when we saw that the Stevie's money flow indicator, the bottom panel of my screen, was back above zero. When it gets back above zero, it's very hard to be short Apple. It's very hard to be short Apple. Well, it gets even harder when you have that condition. Excuse me, my throat has gotten really raw for some reason out here, like to the extent where it hurts. That's why I've been reaching for the water just to cool it down. But in any event, the next level to be watching inside of Apple, 149.41 as we speak right now. That's my oscillator and change line. When price is above that, it clears that. It just gets right back into operating mode, that it's headed to higher prices out here. That's inside Apple. So watch 149.41 out there, because when price takes over that level, the NDX 100 will just take off to the upside. Has to. Doesn't have a choice because of the weighting structure inside of it. So, folks, thanks so much for being here. Sorry for the scratchy throat. And I do mean sorry for it. But stay tuned. Our man David White is up next. And because it's marvelous, magical, magnificent Monday, you got Tom O'Brien from 3 to 5 to take you on home. I'll see you on Terrific Tuesday. Have a great day, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.